Welcome to Blockchain Chatter, the show where I connect with blockchain leaders for a bit of a chat. I'm your host, Dexter Cousins. Today's guest is Ryan McCall, CEO of Zerocap. They provide digital asset investment products to wholesale and institutional investors. As a self-taught software engineer, Ryan has been around financial services since 2006. I chat to Ryan about some of the challenges that have faced the blockchain and digital asset industry throughout 2022, what we can expect to see change in 2023, and we also talk about the work that Zerocap has been doing with the ASX. Ryan, welcome to the show.
Thanks, mate. Thanks for having me.
Yeah, you're welcome. Good to see you. Happy 2023.
Thank you. Same to you. I only had to write 2023 for the first time a couple of days ago, and I wrote 2022 first, of course.
Somebody today said the word ripper, and I had to point out that in 18 years of living in Australia, it was the first time I'd heard somebody say that word.
Yeah, was it me?
It was you, yeah, right. And then literally 30 minutes after that, somebody else said ripper.
Oh, really?
So it must be that thing where probably people have been saying it all the time and I've never noticed it. And now, the cat's out the bag. I'm noticing it all the time.
Yeah. Or maybe this is a new thing for 2023. Everyone's going to be saying it.
Yeah, ripper. That's it. Let's make ripper the word of 2023. Well,
Sounds good.
great to have you with us, Ryan. It was 2022 was a tough year for the industry, but a really good year for Zerocap. And I wondered if you could share with our listeners, before we talk about some of the amazing stuff that you've done, just a little bit about Zerocap and what the business is about.
Sure. So we are essentially a digital asset specialist that provides investment products and technology to wholesale investors and institutions. So I'm one of the co-founders and the CEO. I've got two other co-founders, John and Trent. We founded the business back in 2017 around the thesis that digital assets would go mainstream as an asset class. And in particular, we were thinking about institutional adoption, given the various backgrounds that we came from, and that was the gap in the market that we saw. And, we've had to play the long game in many ways. The space has been largely unregulated for most of its history, although that's changing now. But we have always sought to act as a regulated firm until we actually got regulated. So held ourselves to a very high standard of compliance and governance, and really looked to solve the sorts of problems that institutions would face when they want to access the asset class. So things like counterparty risk, the safety and security of the assets, AML, CTF, and the volatility of the asset class itself. So, it's been a pretty wild ride. As you said, last year was, there was a lot of ups and downs, but we had some big wins and we're pretty pumped about the year ahead.
Awesome. I guess, in some of those big wins, first of all, industry recognition, big winners at the Blockies, winners at the Finnies as well, but some really notable kind of projects that you've worked on as well. Could you tell us a little bit about those projects?
Yeah, for sure. So there are a few specific things that we worked on that really contributed to those awards. So we won Blockchain Organization of the Year and Corporate Project of the Year at the Blockchain Awards, the Blockies. The corporate project was for our work with ANZ Bank on their $8 stablecoin. So they were the first bank in Australia to issue a stablecoin, one of the first few in the world to actually issue a bank-issued stablecoin. And we helped them from a technology perspective, but also with liquidity, custody, market making, all the sorts of institutional services that we offer, and also helped connect them with clients that had a real world need for a stablecoin like this. So the first transaction was with the Victor Smorgon Group, who's a very well-known family office out here in Australia. And they had a liquidity event coming up from the sale of an operating business, and they had 30 mil that they wanted to deploy into the crypto ecosystem for investment, and they were doing that through Zerocap. Now, the traditional or existing rails that you would use to do that are very slow and expensive. So you'd have the transaction that would settle, cash would land in their bank account, they transfer that to us. Now, without getting too into the weeds here, most crypto businesses in Australia are forced into a very small number of non-tier one banks. Some of those banks don't even support international transfers for Aussie dollars. They're not fully hooked up on Swift. So we have to do an FX transaction to get Aussie dollars into US dollars into our US bank account. We settle from there with our crypto liquidity providers. We can buy crypto, and then we can get that back to the Victus Morgan Group. So that process would have normally taken, it's like a T+3, maybe T+5 transaction. It's quite expensive because there's a couple of legs of FX. But using ANZ stablecoin, they could effectively go straight from fiat to crypto, and then they're in the crypto ecosystem, and we can go from that stablecoin directly into other crypto products because we were actually making a market on that cryptocurrency. So that was a big project. It was a meaningful sum of money as well, $30 million. And there's been some other projects with ANZ since, like we used their stablecoin in a tokenized carbon credits transaction, which was very interesting. Some of the other awards that we won, there was the Finder Award for the best innovation in digital currency, and that was for our Smart Beta fund. So one of the problems in crypto is the volatility, which I mentioned earlier. It's no secret that it's a very volatile asset class. The strategy we've got in this fund is to reduce the volatility to match that of equity markets. And the value proposition or the pitch here is you can get the diversification benefits of having Bitcoin in your portfolio without the risk of an 80% drawdown, like we've just seen. So really, it's an institutional product. Like we're pitching this as super funds and that sort of thing. And the way that we do that is by rebalancing between Bitcoin and USDC, or effectively cash. So when Bitcoin's more volatile, we move more into cash. When it's less volatile, we move more into Bitcoin, and that compresses the volatility of the asset. But it actually outperforms Bitcoin on a risk-adjusted basis. So we capture more of the upside than we do of the downside. So we won an award for that. Look, a couple of big wins. It was a really good year. ASX is another big project that we've been working on for quite a while, since the end of 2021, really.
So I wanted to kind of drill down on that, because people will hear ASX and say, oh, but I thought they'd disbanded that project. You've been working on something different to the chess settlement program. Is that right?
Yeah, that's right. So the ASX have built a DLT, or distributed ledger technology as a service infrastructure, and they want app developers, custodians, fund managers, market makers, registries, whoever, to come and build on their platform to kind of create value in their ecosystem. They approached us at the end of 2021, originally looking for a digital asset custodian, which is one of the services that we offer. And we did a couple of proof of concepts just to show how that could be done. So we bridged assets from an external public blockchain, Ethereum, onto their internal private blockchain, and ran some very simple, trading, clearing, and settlement type transactions. But the bigger picture, or the bigger plan, I guess, is to enable the ASX to be a marketplace for digital assets, and that's beyond Bitcoin, Ethereum, and other native crypto tokens, but things like tokenized equities, tokenized bonds, any sort of property potentially could be traded on there. So our custody infrastructure supports any sort of tokenized asset, and as a market maker, we can actually make a market on any of those types of assets. So that's what we've been working on with them for a while now. And the chest replacement, the intention was for that to be built on the same underlying technology infrastructure, but you can think of that really as an app that's sitting on the infrastructure, and they've put that app on ice while they review the findings from that Accenture report and figure out what to do next. But yeah, that's very separate from what we're working on. They haven't put their blockchain initiatives on hold altogether.
Yeah. One of the things that kind of highlights for me last year was the Singapore Fintech Festival, and they the key theme there: blockchain, digital assets, Web3. It was kind of resounding, yes, that we're absolutely supportive of those technologies and see them as the future. Whereas crypto, kind of, the trading and speculative nature of it, they seem to be fairly, well against. Um, I think it was only 4 days later that we had the FTX collapse when coming back, which I guess kind of cemented for them their view. But what it hasn't really waned my enthusiasm for the space. If anything, it's kind of it's crystallized really what the opportunities are, and particularly around trade finance and a lot of the things that you've talked about. Where you're talking about huge sums of money, there's a really strong use case for kind of cross-border transactions, digital tokenization of significant assets as well. What do you kind of get the sense from an institutional perspective as to the potential damage that has been done by FTX? Or do you think now what we're seeing, that was the kind of line in the sand, that the kind of crypto speculative, kind of retail, that's now that's not where the opportunity is, or that's not where the action is now. The action is very much going to be in this kind of institutional space where there's these significant transactions can actually take place.
Yeah, so I think you're spot on with your view on how MAS in Singapore is thinking about crypto or digital assets or blockchain. Like, they're not keen for retail to really participate at this stage. There's quite a lot of investment going in on the institutional side. But yeah, to your question about what impact has FTX had for, I guess on the institutional side, it definitely spooks people, So we're dealing with all the major banks here in Australia and several of them abroad as well. The good thing is that it hasn't really slowed anything for those core group of believers within those institutions that are actually driving adoption of digital assets. But at the board level, where you've got people who may not be believers, true believers yet, it does raise some eyebrows, and the question gets asked: is this really something that we want to be near? But I can say, within each of these major financial institutions, like I said, you've got a core group of believers who really understand the technology and want to drive adoption and drive efficiency in their business, create new products, reach new markets, and the way that they have to go about it is, I guess, get an executive sponsor and make a pitch to the board, usually around some specific use case that can be commercialized, get some funding, go and build a thing, prove the use case, prove the commercial value, and get the funding, increase funding, grow the team, and so on it goes. So we haven't, like most of the banks in Australia, have not taken their foot off the gas as far as blockchain initiatives are concerned. But I think it'll be quite a while before we see banks actually offering crypto assets like Bitcoin and Ethereum and the like to retail customers. Obviously, CBA had their pilot last year for a little while, which they pulled back, which I think is indicative of where the banks and the regulators are at with offering these sorts of products or assets to retail investors. But yeah, I guess what we see from our perspective is institutions are really looking at how to use the technology to. There's like this offensive and defensive strategy, right? And the offensive side of it, like I said, is create new products, reach new markets, drive efficiency, instant settlement, reduce counterparty risk, all these benefits that are inherent to the technology. And then the defensive side of it is, well, I know all my competitors are doing it, so we better do it too, you know? But it's funny because it's almost like a race to be second. No one really wants to be
That's
first. They don't want to be
Australia,
last
mate.
either.
It's everything, right? Whether it's CD or whatever it is. I think there's always somebody. They're waiting for the first mover, and everybody's interested. But it takes that person to go, or that business to go first, right? And then
Yeah,
it happens very quickly after that.
yeah, totally. But we've already seen, the banks here in Australia, CBA issued a bond on the blockchain like back in
Yeah,
2017 or something like that. ANZ launched their stablecoin last year, so things are heating up. I think this year we'll see some fairly significant announcements
yeah.
from the banks around here.
Obviously, capital markets everywhere have tightened up. I think there's a lot of the tech industry as a whole is really kind of suffering at the minute. We've got a lot of economic pressures around things like energy, cost of living crisis. Whenever I've been, I've recruited through several downturns now. The trends that I've seen, Ryan, has always been the focus shifts from kind of growth and a lot of diversification to then focus businesses focusing on the stuff that they do really well, but looking at ways to reduce cost. And usually that's technology and people. Are you kind of sensing that, given the tough economic conditions that we're coming into, that there's going to be more pressure on banks? You talked there about the fees that are involved in these types of transactions. I can imagine, and I know that when I was in Singapore, there was the announcement. I think it was J.P. Morgan and the transaction that had been made, and the reason that they did it on, I think, Polygon, was because they wanted to avoid gas fees on Ethereum network. So we're seeing as kind of like already there's this really kind of self-conscious, a price-conscious approach. Do you think that's going to put pressure on and kind of maybe increase the adoption of digital assets?
Yeah, look, I think there's always a race to the bottom on fees
Yeah,
in everything,
yeah,
right? But efficiency is definitely one of the major value propositions for the technology and why institutions like banks are taking a look at it in the first place. Having said that, like, they are pretty slow moving beasts and they're fairly conservative as well. So they're not going to charge into this. It's gonna take some time, particularly here in Australia. There was a banking royal commission not that long ago, and some of the banks got whacked with huge fines, and I think they're still feeling that. So, there's a bit of experimentation happening at the moment, but I think like banks are still looking for that killer use case or the killer app, and the the funny contradiction or paradox there is they're not really going to realize the true commercial value from these initiatives until they actually release it into the wild. That the way that conservative institutions operate is they want to do things in a very controlled private environment, which is kind of contradictory to the whole ethos of blockchain, really. Um, but you don't get to see, the true power or benefits of something like this until you get it out there and it's adopted. Like non-bank issued stablecoins like Tether or USDC are a great example of that. I think if banks are not willing to put their stablecoins on a public ledger, they're just not going to get the same kind of adoption. But yeah, as I said, I know there are a number of call them experiments or use cases in the mix at the moment. And obviously, you've got the RBA's CBDC pilot that's happening at the moment as well, which is going to be quite interesting. So we're involved in a few use cases. I think there were about 160 submissions for proposed use cases last year, and a handful of those have been selected to progress through to a pilot stage. I think even if the CBDC itself doesn't become a thing, at least not in the short term, I think it will take quite some time. What it has done is really catalyzed the industry, and there's a lot of collaboration happening between crypto native firms and the larger centralized institutions like banks and the ASX that I mentioned, and that sort of thing. So I think there'll be a lot of benefit that we get out of that pilot.
Cool. So I guess one of the other kind of things that's really, I guess, been a challenge for the industry is essentially credibility. And I've seen exactly the same thing in fintech kind of early days, where you'd have a dude in a man bun rocking up to the regulators, telling them how they were going to Uberize banking and do all this funky stuff with the banking industry, and not really kind of recognizing or appreciating or respecting the kind of regulatory challenges and licenses that were required, etc. And I can't help but think that blockchain has suffered a little bit from that as well. Given the background that you've got, how have you found that that's helped you in those discussions to with banking execs to actually get them on board and to steer this from a conversation actually out in the wild, real use cases for the technology?
Yeah, well, I think first and foremost, you're just not even going to have that conversation if you don't respect the regulatory environment. And like I said, banks in particular are inherently conservative. And something that we've done from the very outset, we always figured that the industry would get regulated, and regs are on the way. Here in Australia, it's already regulated to an extent in places like Singapore and the UK. We actually deal in regulated financial products. So we deal in derivatives. We've also got an asset management business. So we've got a few different funds structured as unit trusts here in Australia. They are regulated financial products. So even though the underlying asset is crypto, I guess the wrapper around it is something that is regulated. So we sit under a wholesale AFSL here, which means we can deal in regulated financial products with wholesale clients, non-retail. So even though the crypto as an asset class is broadly unregulated, our business is actually regulated. And that means that we have to lift the bar on compliance and governance to a standard that is just far beyond what's actually required in an unregulated market. And that experience has definitely served us well in the conversations that we've had with banks and the like. And we've brought a lot of people into the business from that traditional finance background as well. Managing director of Deutsche Bank in New York, who used to run the hedge fund business, is our head of trading. The ex-head of emerging markets at Westpac is our treasurer. We've got directors and partners from Optiva, Standard Chartered, Macquarie, ANZ, like all over the place. So we've also got the hardcore techie propeller heads here as well, right? And you do need both to be able to do this well, to really understand the technology and understand where the value lies. But then how do you bridge that to, traditional markets and understanding the problems and inefficiencies that those markets have, the infrastructure and also the regulatory environment. So bridging those two things is basically what we do here. But yeah, I know, like with ANZ Bank, for example, the only reason we got a foot in the door in the first place was the fact that we were regulated. And I think this year in Australia, I think we'll start to see um, a clearer shape of what the regs are actually going to look like. There are a number of exercises happening in the background at the moment across ASIC and Treasury and in Parliament and the like. So we've got some idea of what it's going to look like, but that's going to get sharpened up this year.
Awesome. Now, I just missed a perfect opportunity to make a seamless transition into the second part of the discussion, which is around the business and leadership and just your experiences of being an entrepreneur. And you touched just before on some of the people that you've brought into the business. And what's been fascinating for me from a kind of human capital perspective over this last 10, 12 years, following and working with startups, has been to see these kind of very, very different worlds of a large financial institution and a fintech startup or a blockchain startup. And that just it's like a paradox, right? Of we've got data as well to also support the hypothesis that somebody coming from a large financial institution into a business of your size, usually I think it's 9 out of 10 times that person will leave within the first 6 months. How have what have you kind of noticed, bringing people from those environments into a business the size of Zerocap, and how have you managed to kind of, I guess, get the best out of people in that environment? What are some of the things that you look for?
Yeah, so we, at the moment, our team is about 70 odd staff. Had a fair amount of growth. Like at the beginning of 2022, we were, beginning of 2021, we were about 15. End of 2021, we were 45, and now we're about 70. As far as how we attract and retain people, it's a relatively small industry. Um, I don't know if this is a great answer, but there aren't a lot of solid options for people that want to get into the industry. Like if you know anything about the asset class or the technology, you probably don't want to go and work at a bank, right? You want to come and work for a startup or a mid-sized business or a scale-up, where you can actually have a bit more of a meaningful impact. Um,
Haven't said that though, Ryan. I think pretty much everybody that you would ask would say, "Yeah, that's me. I'd much prefer to work in a startup. I get shit done." I don't, and then when they get put in the environment, saying it and doing it are two very, very different things.
yeah,
How have you kind of seen people make that transition? What do you think have been some of the qualities that people have possessed that have enabled them to make that shift rather than just talking about it, of being able to actually do it?
yeah. Look, it's a really important point, because it is a very different environment to working at a gigantic investment bank or something like that. I guess some of the qualities that we look for are some kind of entrepreneurial experience or background or skill set or something like that. Even within a large institution, you can still be creative and innovative and build new products and launch new products and open into new markets and all that kind of thing. So that's definitely something that we look for. Um, there are fairly specific roles that we've hired for, like options traders or someone that's got experience managing treasury or compliance, and all that sort of thing. So, there are, each of those have a very defined set of skills that we're looking for. Um, and I would say, like, over the last year and a half, really over 2 years, I would say in particular, the crypto has been very exciting, very attractive. So we really haven't had too much of an issue in attracting talent. Um, and the profile of the business has helped as well with the sorts of projects that we've had, the partnerships that we've formed, the awards that we've won, all that sort of thing. But I will say one of the things that we are conscious of is hiring people that are what I would say are institutionalized, because in a big organization you can get away with doing not very much work, right? As long as your bum's on the seat, you sort of punch in, punch out. You can kind of be invisible. So that's why I mentioned before we like to see some evidence of people being entrepreneurial to an extent, even within you know those organizations. Um, but I think it's becoming increasingly apparent, particularly with the market that we're in at the moment, that a passion for the technology or what the technology represents is actually quite important. Um, we have seen that there have been a few people that have come from a tradfi, like a purely traditional finance background, didn't really know anything about crypto, that have come in here. And we're in a bear market at the moment. Like the industry has been imploding over the last year, and if you don't really love it, I think that can be pretty tough. And as a business, strategically, we've even made a bit of a shift um, to service more like what I would call crypto native customers, or clients that have already got some exposure to digital assets. Less of a focus on the private wealth, family office type clients. So yeah, having people in the business that resonate with that is definitely important.
Awesome. Um, you mentioned there 2 years ago you were 15 people, you're now 75. What have you learned about yourself as a leader on that journey? What are some of the kind of key lessons, and things you might do differently if you had your time again?
Yeah, that's that's a difficult question. Like when the business
I'm
was,
not here to ask the easy ones, right?
yeah, no. Um, when the business was smaller, you have a lot of time to think and plan and be very deliberate about what you're doing, a lot more structured. Um, when you're in a growth phase, when you're in a bull market and customers are kicking down the doors to buy your product, you are so busy being externally focused and servicing customers that you kind of lose a lot of that structure and planning and all the rest of it. Um, so, one thing that I've been conscious of that fact, right? And I've been trying to take a step back, pretty regularly and have a bit of a breather and just think and plan. And it's actually amazing. One of the guys on our board, Pete Edwards, said this to me recently, and I totally agree. It's amazing when you actually write something down and you plan it, how often it comes true, right? And I heard another sort of anecdote like that, or a quote recently. Um, if you don't have a if you don't have a plan to succeed, then you're planning to fail. It was something like that, right? And it's so true. Like you're just flying by the seat of your pants, and that can only get you so far until you hit a tough market like we're in at the moment, and that planning and diligence and scenario planning is really really important.
Yeah.
Um,
There's a lot of stuff though, right? For entrepreneurs, it's really difficult. 'Cause if you go on Twitter or LinkedIn or anywhere, the amount of bullshit that it's kind of these memes, right? Like if you've got a plan B, you're never going to succeed because you just got to be committed to plan A. and it's kind of what, what,
Yeah,
what? Like, I mean, what are you running a business here, or are you just like filling yourself full of shit, right? It's like,
yeah,
and it's
totally.
kind of what do you do? And where do you go to get sound advice, inspiration, kind of sanity checks? What have been the things that you've kind of learned over this 5 year, 6 year journey that you've kind of rather other than just taking the time for yourself, kind of get real solid, you know, valuable advice.
Yeah. Um, I think it changes at different stages in the business. Like you got to do what's right for you at the time.
Yeah,
As you say, there's just so much advice out there. There's information overload, and sometimes you can read some of that stuff and it doesn't resonate, and you sort of think, shit, what's wrong with me?
yeah,
Like,
yeah,
I mustn't be thinking about this the right way because I don't get it or I don't agree or whatever. But yeah, one thing that I have learned is you've got to find the right people for the right stage in the journey.
yeah,
And we've had, I would say, I don't know, there's like maybe 5 to 10 different advisors or mentors or something like that we've had or I've had over the history of the business. And you feel it when there's a connection. Um, and it comes, it goes both ways. The other person sort of feels it too. Like, yeah, I get where this guy is coming from. I understand what he's going through. I've been there, whatever. And you connect for a certain period of time, and then you might outgrow them. It's like when you go and see a counselor, right? I don't know if you've ever done that, but you usually go in there for a very specific purpose, and you talk about it, and it might last a few months, and then you've you've talked about it. You've had your growth. You've learned whatever lessons you needed to learn, and then you move on. So, like, there is no one size fits all, and that goes for the sorts of quotes that you were
yeah.
talking about there, or plan
I
A,
think it
plan
also
B,
goes
plan
for
C.
people in the business as well, right? Like the people that you had early days are not necessarily going to be the right people when you're 150 people or 300 people or 1,000 people. And for them as well, they kind of, hey, this isn't what I signed up to. The business gets too big. And I think, one of the issues I've seen a lot of leaders grapple with is, for some reason, kind of have it in our heads that if somebody leaves the business after 18 months or 12 months, it's a bad thing. If they've delivered the outcomes and everybody's happy, I think it's actually a great thing, right? It's like it's actually it's a lot more kind of productive than having somebody stay 3 years and only get half the output from them.
For
Um,
sure.
we've seen a
It's
lot,
not.
right, with some of our clients that somebody's worked with them early days and then 5 years later, they've gone off to the US or whatever. 5 years later, come back and join the business, and it's they're an even better kind of asset than when they
Yeah,
left.
yeah. It's not always so black and white or easy to identify kind of that optimal point of where someone has delivered, the right amount of value that you
Mm,
want from them or that they want to give before they move on. And I guess it's different for different people, but I can be quite emotional, I guess, in the sort of connection that I have with people. And when people want to leave, that really sucks if you've got a personal connection with them,
yeah. Do
you
you
know.
kind of take it personally as in, it's almost like a slight to you, and you kind of feel that you've done something wrong, or what could I be doing better? But like if your girlfriend kind of turns around and says, "Hey, it's not you, it's me. Not working out." Kind of
Yeah,
found someone else.
yeah. I don't take it personally because you can't please everyone. Like you just can't,
Yeah.
and that's just life. So you touched on this
How do you
before.
distance yourself though, right? Because having your own business, pouring everything into it, the sacrifices that you make, the sacrifices that you make with your family and time and all of that stuff. And you've built this business, right, which is really doing some amazing stuff. And it's yours, right? Like it's you built it, right? It's your baby. How do you kind of, because a lot of founders find this really difficult, right? Is to distance themselves emotionally and kind of detach from, the absolute kind of emotion that you have of this business, right? And the kind of the absorption that it has of you, um, to then kind of be able to not feel hurt when it gets rejected, or kind of people decide it's not for them anymore.
Yeah, it's a hard question to answer, but all I can say is that you just have to,
Yeah,
right? Like for your own sanity and also for the sake of the growth
necessity
of
is the mother of invention. They say,
yeah, yeah.
right?
Like I know this is something that a lot of founders grapple with is to hand over responsibility and detach themselves from certain parts of the business, but you just have to because otherwise you stay in the weeds and you're sacrificing the growth of the business. You've got to keep you have to be the glue in a way between different teams and people in the business, but you've got to have a bird's eye view of what's going on. And if you're too stuck in the weeds, you lose that. Yeah, and it's ultimately going to be detrimental. So even though uh, what sometimes you hand over that responsibility and things may not be done exactly the way that you would do it, um, and you might feel squeamish about that or kind of cringe that something's going out there into the world and it's not quite the way I would want it done. Like you do that enough times and you do just kind of come to accept it, I think. um, and yeah, you have to take the same kind of approach with people coming into the business and leaving. When it's not right anymore, it's not right, and that's cool. It's no hard feelings. Like I said, it can still kind of suck from a personal connection
Mm,
perspective, but ultimately, it's the best thing for everyone.
yeah. Um. Now we're on a new year, a new beginning. Um. Last year was a tough year, so I don't really want to talk about that much more. But when you look
Thank you.
look to 2023, what's got you excited about the whole blockchain, digital asset, Web3 space? And are there any businesses or kind of areas of innovation that you've kind of really got a watchful eye on with a bit of anticipation?
Yeah, so I think tokenization is the big theme in digital assets. Um, we saw a lot of hype around NFT artworks in particular, and the metaverse. And I mean, you get this with any sort of new technology. You get this hype cycle um, where there's a exuberance and a lot of money thrown around, and people riding the FOMO train, um, and then the whole thing collapses. But out the back of that, you do get real value. The same thing happened with the internet. The same thing happened with mobile technology. The same thing's going to happen with NFTs. But where NFT artwork, like artwork, is a legitimate use case for NFTs. But I think where the real value lies is in uh, other real world assets, like I was saying before, whether it's private equity or might be tokenized carbon credits, or um, there's bonds on the blockchain, there's funds that are being tokenized.
I mean, you
There's all
you think
kinds of
you think of the amount of value that in assets in the world that is locked in that you can't access, right? Or if you want to access, there's a lot of things that you've got to do and a lot of time that it takes to actually realize or be able to extract some of that value. I agree, right? With tokenization, it's like instant. You think of trade finance, where you can be talking about 90 days to get, you know, money to be able to get goods through customs. stuff like that, right? It's kind of
Yeah.
crazy, right? But this is unfortunately the world that we're still living in, and a lot of the clients that you work with, they've still got MS-DOS systems for doing trade finance, right? And green screens. I mean, it's crazy, right?
Yeah, it's crazy. It works, but it is kind of crazy. One of the things that's incredibly frustrating about working in the industry is we're using this technology that has all these amazing benefits, like instant or near instant settlement, but we're still bound to the traditional rails and infrastructure, which slow everything down. So we're thinking about the year ahead. To your point, and things I'm excited about is that decoupling and making things truly native on the blockchain. An example of that is the transaction that we ran. I think I mentioned it before last year with ANZ Bank and the Victor Morgan Group, where they purchased tokenized carbon credits. Now, that's a transaction that would normally take place completely off chain, using fiat money to buy accus. But this is something that happened near instantly. There's better liquidity, there's reduced counterparty risk, there's lower costs. It's like this, it just makes so much sense. And we are working on a number of use cases, and I know there's plenty of others in the mix with some major financial institutions to bring more of these sorts of products to life. So, I think ultimately we'll see the tokenization of everything. And I think this will be the year that we start to see, some real commercial value coming from this technology. We're in an environment, like I said earlier, we're in a bear market for crypto, right? So, it's the talk is not so much about the price of the asset. It's more about we're in build mode. What are we doing with the technology? Well, that's certainly what institutions are focused on anyway. And I think as far as um, regions or jurisdictions as well, Singapore, which you mentioned, is really exciting. Um, they've got support from the regulator. There's a lot of investment in the space, a lot of investment, just a lot of money flowing in generally, out of Hong Kong and into Singapore. There's a lot of family offices setting up there. Zerocap is intending to set up an office there this year. So we set up in London last year, and we're looking to open an office in Singapore this year. So that's kind of where we want to be.
And what other cool things have you got planned for 2023, Ryan?
So we're working on a few things for ourselves. So we've got a bit of a rebrand going on at the moment, which is pretty cool. We're excited about that. We're also doing a revamp of our portal, our wealth portal, where our customers, sort of the main hub for all their trading activity and custody. Launching some new products, particularly for institutions around the treasury side and NFTs. We're working on a few big projects for clients as well. I mentioned the CBDC pilot that we're working on, and also the ASX. So there's some big stuff happening there. And we've got some other family office clients that want to do some really interesting things. Like there's one that's tokenizing a commercial property, another that has a commercial property fund. So rather than buying units in a fund, you're actually buying non-fungible tokens, which represent a debt instrument, and the yield will actually be like airdropped directly into your wallet, which is really cool. There's some tokenization of carbon credits, tokenization of water entitlements, which is something that I haven't seen done before. Other sorts of debt instruments like bonds. So, they are all pretty significant projects which will be launching this year. We've also got some conversations happening with other banks and exchanges internationally as well, and hoping to have something materialize there this year as well.
Awesome. And if anybody's out there listening, potentially interested in the Zerocap solution, what's the best way for them to get in touch, Ryan?
Zerocap.com, right? You can find everything there. Um, we are very active on LinkedIn. We have a weekly newsletter that gets published, the weekly crypto market wrap. You can sign up for that on our website, again at zero.com. We're also on Twitter, but go to the website, and that's where you'll find everything.
We get a lot of awesome talent listening to this podcast as well. If anybody's interested in joining the Zerocap rocket ship, what's the best way for them to find out about careers with you?
Yeah, so careers at zerocap.com. Careers at zerocap.com is the email address. We usually post our job ads up for big ones on LinkedIn, but we're always open to applications from talented people. Particularly given that we want to grow our presence in the UK and, as I mentioned, Singapore as well. But we have a very strong institutional focus. So experience in structured products, structured solutions is something that we're really trying to focus on at the moment. And anyone that's got, true institutional crypto experience, hard to come by because crypto just hasn't been around for that long. But there's been a lot of redundancies and layoffs and downsizing over the last 6 or so months. So I know that there's a lot of talent out there, and we'd love to hear from those people.
Awesome. Well, Ryan, it's been great to have you on the show. Congrats on all the big achievements of last year, and super excited to see, kind of how things pan out over 2023.
Thank you, mate. Appreciate it. Good to chat.